When it comes to compensation, a few of the key challenges for churches and Christ-centered ministries include determining the appropriate level of compensation for staff, documenting and reporting the compensation, and then also maximizing the tax advantages of certain fringe benefits. In this video, we'll cover 9 specific compensation steps of excellence. Number 1, reasonable compensation. Reasonable compensation is defined by tax law as what would ordinarily be paid for like services by a like organization under similar circumstances. The board or a committee authorized by the board of every organization should annually approve the top leader's total compensation package and should be notified annually of the total compensation package of any member of the top leader's family who is also employed by the organization. Those participating in the compensation decision should not have any conflict of interest, whether direct or indirect. Number 2, housing and the housing allowance. Ordained, commissioned, or licensed ministers performing ministerial duties in a local church setting generally qualify for a housing allowance. Workers in a Christ-centered nonprofit organization may qualify as ministers in certain situations. These include certain denominational service, assignment by a church, or other service if the individual's service for the organization substantially involves conducting religious worship or performing sacerdotal functions. Number 3, deferred compensation. Nonprofit organizations may defer the compensation of executives up to certain limits that are set by the IRS. 2 of the most common arrangements are 403B and 401k salary reduction arrangements. Number 4, fringe benefits. It's important to understand some of the basic fringe benefits that are common for nonprofit organizations. These include employer-provided cell phones. If a church or ministry provides a cell phone to an employee primarily for non-compensatory business reasons, it's treated as a tax-free fringe benefit. Additionally, an employee's personal use will be treated as a de minimis fringe benefit as well. Personal use of employer-provided vehicles. If a nonprofit organization provides a vehicle to an employee, the vehicle is almost always used for at least some personal purposes. This generally requires the fair market value of the personal use to be included in the employee's compensation to the extent that that value is not reimbursed back to the employer. Medical, dental, and vision insurance. Premiums that are paid by an employer through a group plan for medical, dental, and vision coverage for an employee, including their dependents, are excluded from income for income and Social Security tax purposes. If an organization pays for an individual healthcare plan or reimburses employees for premiums they pay for such a policy, these amounts are usually taxable income to the employee unless the employer adopts a qualified plan, such as a qualified small employer health reimbursement arrangement. Disability insurance. If an organization provides disability insurance coverage as part of the minister's taxable compensation, any benefits from that plan are tax-free. Compensation-related loans. Loans to employees are not permitted by law in some states. But where loans are permitted, an employee loan at below market rates may require reporting of additional compensation to an employee. Property transfers. Property transferred to an employee at no charge or below fair market value constitutes taxable income to the employee. Moving expenses. Moving expense paid on behalf of an employee or reimbursed to an employee represents taxable compensation. You may notice this is different than the rules had been in years past. Gifts. A distribution of cash, a gift certificate, or a similar item of value that's readily convertible to cash must be included in the employee's income. Number 5, non-discrimination rules. To qualify for exclusion from income, many fringe benefits must be non-discriminatory. This is especially true for many types of benefits for certain key employees. Failure to comply with the non-discrimination rules doesn't disqualify a fringe benefit plan entirely. The benefit is simply fully taxable for the highly compensated or key employees. Number 6, paying employee expenses. An accountable plan is a reimbursement arrangement that requires, number 1, a business purpose for the expense, number 2, employees to substantiate the expenses, and 3, the return of any excess reimbursements. This plan is required for reimbursement of expenses to be excluded from taxable income for employees. Number 7, reimbursing medical expenses. There are multiple options that employers may use to assist in the reimbursement of medical expenses. These include a health savings account, a flexible spending account, and a health reimbursement arrangement. Number 8, workers' compensation. Workers' compensation benefits are required by law in many states to be provided by the employer. And then number 9, overtime and minimum pay. The Federal Fair Labor Standards Act and similar state laws apply to most nonprofits when it comes to overtime and a minimum wage. Carefully study these laws and seek professional help to determine which of your employees may be exempt from these requirements. I know we covered a lot of ground here in a short amount of time, but hopefully these 9 fundamental steps are helpful when it comes to setting the compensation of your church or ministry leaders with excellence.